Tax deductions most small businesses always overlook. Here are the top easily overlooked small business expenses that don't make it on the tax return, thus giving free money to the IRS and state tax authorities. Some of this might look small, but ultimately, $1 plus another dollar makes $2, and this cost can add up fast, depending on your business and the kind of record-keeping procedures you have. Watch now. Welcome back, folks, to another edition of Sweetie Kiwi. How are you doing today? I hope you are doing fantastic. I hope you are doing marvelous. I'm doing fantastic. If you are doing as great as I am, go grab a cup of coffee or tea or vodka and let's roll. I want to talk to you today about tax deductions most small businesses always overlook. Now, before we get into that part, I want to just quickly take some time to go through what the typical tax deductions are. I want to do this recap because according to the IRS, 71% of business owners are aware of these deductions. But in case you are among the 29% who don't know about them, we just wanted you to give you a quick reminder. So first, you have auto expenses. So those are the typical tax deductions. Auto expenses, expenses of going into business. So for auto expenses, you have two options, two models. You have the actual expense method and the standard mileage rate method, right? And then you have expenses of going into business. Those are basically, you can deduct them. Books and legal and professional fees. So business books, including those that help you do without legal and tax professionals, are fully deductible as a cost of doing business. Insurance, right? So anything from medical to fire, theft, flood, credit insurance, liability insurance, professional malpractice insurance, workers' comp, business interruption insurance, life insurance, and so on and so forth. All of this qualify. You have travel. So if you travel for business, you can deduct many expenses. And I'm talking here the cost of plane fare, cost of operating your car, taxis, lodging, and so on and so forth. You have interest. Interest is also important. If you use credit to finance business purchases, the interest and carrying charges are fully deductible. Carrying charges mean things like fees. Equipment also is important, so you can deduct that. Charitable contributions is very important also. So if your business is a partnership, a limited liability company, or an S corporation, so in other words, a corporation that has chosen to be taxed like a partnership, your business can make a charitable contribution and pass the deduction through to you, the owner, to claim on your individual tax return. If you own a regular C corporation, that is, the corporation can deduct the charitable contribution. So if you got some old computers or office furniture, giving it to a school or a library or other nonprofit organization can yield goodwill, good karma, plus a tax benefit. Let's go talk about taxes. The weird thing is, not the weird thing, it's kind of cool because you can actually deduct taxes that you've paid. So taxes incurred in operating your business are generally deductible. So sales tax, excise and fuel taxes. If your business pays employment taxes, the employer's share is deductible as a business expense. You have federal income tax paid on business income. Remember that is never deductible. So the federal income tax paid on business income is not deductible. That will be double dipping if you think about it. State income tax can be deducted, however, on your federal return as an itemized deduction, not as a business expense. However, the annual personal itemized deduction for state and local taxes is limited to $10,000. Real estate tax on property used for a business is deductible, along with any special local assessment for repairs or maintenance. If the assessment is for an improvement, for example, to build a sidewalk, it isn't immediately deductible. Instead, it is deducted over a period of years. In accounting, they call it's capitalized. So you capitalize, if you have significant improvement, you capitalize the amount and you just pass it on over several years. And the reason is because the IRS thinks that improvement that you're doing is going to benefit the business over a series of years. So this is not just a 1-year thing. So the IRS wants to split the benefits, the cost over the number of years that you're going to benefit from that improvement. You also have education expenses. So you can deduct education expenses if they are related to your current business, trade, or occupation, right? So I'm talking here about things that allow you to maintain or improve skills required in your present business. The cost of education that qualifies you for a new business or trade is not deductible. Advertising and promotion, also you can deduct that. Pass-through tax deduction. Now, we had a law that was passed in 2017, and it was called the Tax Cut and Jobs Act. This piece of legislation created a new tax deduction for individuals who earn income through pass-through business. This includes any business that is a sole proprietorship, a one-owner business in which the owner personally owns all the business assets, a partnership, an S corporation, a limited liability company, or a limited liability partnership. You can see here that the legal structure of a C corporation is excluded from this list. All right. So this is it, folks. I'll just give you a quick rundown of your typical tax deductions. Now, as I said, the IRS says that 71% of small business owners are aware of this, but 29% are still ignorant about that. So I think if you are part of those 29%, please know that those expenses are available to you to deduct on your business tax returns so you can save money. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another edition of Sweetie Kiwi. I hope you are doing fantastic. I'm doing marvelous if you're to ask me. Now, in the previous section, I was talking to you about the typical tax deductions that businesses have to make. Now, let's talk about the easily overlooked business expenses, the tax deductions most small businesses always overlook. You want to keep your eye out for them. 1. Bank service charges. If you are in a business and you do a lot of bank transactions, you want to keep an eye for that. Business association dues, right? You're part of a professional association. Every quarter, every month, you have to pay something. This you can deduct. Business gifts, you can deduct them. Business related magazines and books. This sort of harks back to what I said about education, right? So those are definitely deductible. Casual labor and tips, also deductible. Casualty and theft losses, definitely deductible. The trick here is that you cannot deduct more than you have to. You can only deduct the portion that is above the money that the insurance gave you. If you are covered for this kind of casualty and theft losses and something happens, let's say you suffered a loss of 10,000 as a result of casualty and theft losses, and your insurance company indemnifies you up to 8,000. The other 2,000 you can deduct that as business expense. You also have coffee and beverage services, commissions, consultant fees, credit bureau fees, office supplies, parking and meters, petty cash funds, postage, seminars and trade shows, and taxi, bus, and Uber type fares. Now, I just want you to pay attention. Just because you didn't get a receipt doesn't mean you cannot deduct the expense. So you can keep track of those small items, regardless of receipt or not. Beyond tax filing, it is important to understand that overlooking these expenses affects your business negatively. Without good records, you cannot monitor the progress of your business. You cannot prepare financial statements. You cannot identify income sources. You cannot keep track of expenses. And of course, which is more important, you can never prepare accurate tax returns and support items reported on those returns. So here you have a whole array of reasons why you want to pay attention to your business expenses and not overlook some of them when it comes to filing your tax returns. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another edition of Sweetie Kiwi. So in the last two sections, I gave you your typical business expense, and then I gave you a list of the easily overlooked business tax deductions. Now I want to just quickly talk to you about how to avoid overlooking business deductions. This will be a crash course on operational procedures when it comes to accounting. Let's just say effective bookkeeping procedures. Now, you want to assign responsibilities and keep your staff accountable. That's something you have to pay attention to. For example, accounting department, the originator of the transaction, the recipient of the transaction, the head of the originating department, the head of the receiving department. You always also want to pay most expenses via credit or debit cards so that you can do a monthly reconciliation of credit or debit card statements to your company's accounting ledgers. Another thing you want to do is to record your business transactions properly. So a good record keeping system includes a summary of your business transactions. So business transactions are ordinarily summarized in books called journals and ledgers. So you can buy them at your local stationery or office supply stores, or you can just use an app. Nowadays, it's just very fast. It's faster and cheaper to use an app. So a journal is a book where you record each business transaction shown on your supporting documents. You may have to keep separate journals for transactions that occur frequently. And then you have a ledger. A ledger is another type of book. It's a book that contains the totals from all your journals. It is organized into different accounts. You also have electronic records. All requirements that apply to hard copy books and records also apply to business records, which are maintained using electronic accounting software, point of sale software, financial software, or any other electronic record system. So the electronic system must provide a complete and accurate record of your data that is accessible to the Internal Revenue Service. All right. Now, whether you keep paper or electronic journals and ledgers and how you keep them depends on the type of business you're in. Let me give you an example. A record keeping system for a small business might include the following items: business checkbook, daily and monthly summary of cash receipts, check disbursements journal, that's when you pay people, depreciation worksheets, employee compensation records. You also need to understand when it comes to avoiding, like if you want to avoid overlooking business deductions and be compliant with IRS tax rules, you want to understand what the agency calls the concept of burden of proof. The responsibility to prove entries, deductions, and statements made in your tax returns is known as the burden of proof. You must be able to prove, in other words, substantiate certain elements of expenses to deduct them. Generally, taxpayers meet their burden of proof by having the information and receipts where needed for the expenses. You should keep, consequently, proper records to prove your expenses or have sufficient evidence that will support your own statement. You generally must have documentary evidence. I'm talking here about bills, canceled checks, receipts to support your expenses. Additional evidence is required for travel, entertainment, gifts, and auto expenses. All right, folks, this is it for today. And we're talking about tax deductions most small businesses always overlook. And I was first giving you a rundown of your typical tax deductions, and then the easily overlooked business expenses, and how to avoid overlooking business deductions. How do you do that? You want to assign responsibilities and keep your staff accountable. Just assigning responsibilities doesn't work. You have to keep them accountable. Record your business transactions properly. And you want to understand the concept of burden of proof. Now, when it comes to the easily overlooked business expenses, you have bank service charges, business association dues, business gifts, business-related magazines and books, casual labor and tips, casualty and theft losses, coffee and beverage service, and so on and so forth. Thank you, guys. I will see you another time. But until then, remember, stay marvelous.